G'day guys, welcome to the final Australian property market update for 2025. Now, Simon and I have made it through another year.
We got there.
So many things have happened this year, which we'll reflect on towards the end of this video. But before we get to that, Simon, what's been going on across the country in the last month? Because we're seeing fire again.
We are seeing fire. We've absolutely seen Perth, Brisbane, Adelaide and Darwin have another cracking month and another cracking 12 months in those three markets. Starting to see a massive resurgence in Melbourne and Sydney as well. Across the board, Australian property values are rising. Obviously, there's a lot of positive things out there with the stimulus packages. Those first homeowner grants have really helped stimulate the Australian property market. And even though the RBA is holding at 3.6%, there's just so much demand out there and so little supply that it's continuing to put pressure on property prices.
So when we look at the last month, you actually had to double check it because you're like, are these numbers actually for real? And they are. Some of the markets across the country are on absolute fire at the moment. So what's going on in the last month and what's happened in the last 12 months as we end 2025?
Now, what's insane is Brisbane, Adelaide and Darwin all recorded a monthly capital growth rate of 1.9%. And this is what absolutely blew me away. Perth was up 2.4% over the last month, which is just a massive increase in property values over such a short period of time. Now, Sydney was up by 0.5%, Melbourne up by 0.3%, Canberra 1% and Hobart 1.2%. So every single capital city on the rise over the last month.
Now, obviously, these are phenomenal monthly growth rates and extremely unusual when you look at the long-term history of Australia. But if these continue on into 2026, we could see the likes of Brisbane, Perth, Adelaide and Darwin based on the last month go up by almost 20%. And if you hang around till the end of the video, we'll actually share what SQM is predicting for each of these markets into the new year, which are looking phenomenal.
But before we look forward, we'll look back on what the last year has looked like, which is rising property prices across every single capital city in Australia. Once again, the three big winners, or the four big winners, was Perth, Brisbane, Darwin and Adelaide, a close fourth there as well. Now, Sydney was up by just over 5% for the last 12 months. Melbourne up by just over 4% on average, but I've been looking at some individual suburbs down in Melbourne. The top performer almost 30% and some of the average performers around 7 to 10% as well. So these big capital cities like Sydney and Melbourne are so massive that these averages sometimes look a lot lower than the needles in the haystack that are scattered throughout the cities. Now, Brisbane and Perth continuing their arm wrestle, with Brisbane up by 12.8% and Perth up by 13.1% over the last 12 months. So it's been an awesome 5 years watching these two markets battle it out. I think Perth has just edged out Brisbane. We'll see what the future holds. Adelaide up 8.2% over the last 12 months. Canberra up by 4.2%. Hobart 4.7%, and Darwin, Australia's top performing market in 2025 in terms of the capital cities, up by 17% on average. But I know some suburbs in Darwin have absolutely smashed that, maybe even doubled those growth rates. So what a hell of a year for 2025 around Australia.
Now, if we look at vacancy rates across the country in the last month, they are all sitting below 2%, which is that sweet spot where effectively every capital city in Australia at the moment is currently undersupplied from a property perspective. Although, as we both know, if we were to look at Sydney, for example, with its 800 suburbs, there'd be suburbs with vacancy rates sitting at 6 or 7% right now, and there'd be suburbs with vacancy rates sitting below half of 1% too. So take obviously the averages with a grain of salt, but what this says to me, particularly for Brisbane, Perth, Adelaide, Hobart and Darwin, is there is certainly not enough property for the people moving into these markets at the moment. And like we've talked about before, when we see vacancy rates as low as they are, people start making the decision as to should we rent or should we actually go out there and buy. Now, with interest rates coming down at the same time and wages going up, many more people are in that position. On top of this, with these monster first home buyers grants and all the benefits around that across the country going into the new year, I think it's going to be really interesting to see what those five markets actually end up doing by the end of 2026.
Now, one of the clearest indicators as to where property prices could go is consumer confidence, which is how are people feeling about the property market? How are people feeling about the economy? Now, last month it was sitting at 92.1 points. This month it was at 103.8 points, which is great to see people feeling a lot better about the economy and where things are headed. So it's looking really good at the moment. It's trending upwards, which is really lovely to see after a couple of years of it being at very, very, very low levels.
Now, when we look at unemployment, we're still sitting at chronically low levels based on history at about 4.4% across the country at the moment. But what's statistically interesting to me and Simon is every single month as a bit of a pulse check, we look at the lending rates across the country and we compare how many loans are being written to owner-occupiers or mums and dads versus investors. Now, historically it sits at about 70-30, but right now the investors are coming back into the market in a big way. In fact, again, this is the first time that I've seen these numbers looking this way since we started recording these monthly updates, with the number of loans being written to mums and dads at the moment sitting at 59% and 41% sitting at investors. So we know that the market is hot. We know that Perth, Adelaide, Brisbane, Darwin have absolutely kicked ass. We know that basically every single suburb that we bought as a business in either Brisbane or Melbourne or Geelong in the last 12 months went absolutely insane, growing by as much as 10 to 30% in some instances. And I think people that have been sitting on the sidelines through the interest rate stuff, through the APRA stuff, through all the changing governments and all the unrest across the world, as well as through the crazy COVID markets, are now getting out there and starting to do things again, which is exciting for us, because for you guys and for us that currently own our own homes or investments, those people will continue to drive it up. And for people like me and Simon who are buying properties literally as we speak, it's a good thing when there's many people out there looking to do the same thing.
As we start to have a look at interest rates, we know the cash rate was held in the month of December at 3.6%, which was a little bit of a letdown. A lot of the money markets earlier this year were anticipating or predicting further rate cuts, but with that inflation trending upwards, we don't know if it's a seasonal thing or if it's actually here to stay again, but the RBA just staying on that side of caution, keeping those interest rates where they are, which has led to the average variable mortgage rate being at about 6.99% and the average fixed rate at about 6.15%, which kind of blows my mind, because I just challenged my banks to see if I could get a further interest rate cut, even though the RBA didn't lower them, and they were more than willing to give me a little bit of a discount. And my investment properties are now sitting at about 5.5% interest only, and my owner-occupier residence is about 5.22% principal and interest right now. So, you know, I'm happy to be on the winner's side of those averages. So if you're sitting at 6.99%, maybe it's time to check in with your broker or bank to see if there's a little bit of a discount out there.
And when we look at the total number of listings across the country at the moment, according to SQM research, they're actually down by about 5.4% month on month, which we can all sort of feel at the moment, right? Like, it doesn't feel like there's enough property out there to buy in the hottest markets in the country today. Now, when we look at the number of distressed listings across the country, which is a bit of a pulse check of how people are going in terms of paying off their home loans, or how many people are being forced to sell those homes under distressed conditions. Again, month on month it's down, but the big news is over the last 12 months from this time last year, the number of properties being sold under these distressed conditions, or the mortgagee repossessions, or the public trustee sales, are down about 29.5%, which honestly is phenomenal. Like, that's what we want to see. People being in positions to be able to pay their home loans off, which is a sign of the strength of the underlying economy right now.
Now, to jump into the gold nugget of the month, this is a little teaser into one of our videos that's coming in the next couple of weeks, which is our Australian property market predictions for 2026. Now, one of the analysts that we love to look at is SQM, or Lewis Christopher, who does a lot of these predictions, has based his predictions off a bunch of different scenarios. Now, if you have a look at his base case scenario, it's looking like 2026 is shaping up to be another incredible year, with Perth, Brisbane, Adelaide and Darwin continuing to lead the charge with capital growth rates, but also Sydney, Melbourne, Canberra, Hobart, all expected to see property price gains over the next year.
You know, rounding out 2025, it's been a phenomenal year for investors. For those of you out there that have owned property this year, you've made money basically in every capital city in Australia. For those of you in the right areas, you probably have made 10 to 30% in the last 12 months. Now, as we look forward to the new year, obviously the stuff from SQM research looks phenomenal, but when we look at what Domain's saying, realestate.com, all the major banks, all of them are extremely bullish in the new year. In fact, we recently sat down with one of our corporate banking clients, Ray, who shared some information and some modeling that he's been doing through Elon Musk's AI tool, Grok. And what we found is that the predictions, particularly for Brisbane and Perth, over the next 5 years and the next couple of years look phenomenal. In fact, they're suggesting that the growth could be as strong as 8 to 13% per year in both of those markets during that period of time. Now, we don't None of these guys do, and AI certainly doesn't have a crystal ball for the future. But as investors moving into 2026, with vacancy rates low, interest rates on the way down or stabilizing, unemployment, the infrastructure across the country, the fact that the banks for the first time in a long time want to lend money, with the fact that there's so many Australians coming into the country, we are extremely bullish on property in Australia in 2026, which is why we're both going out there and buying the right markets, the right suburbs at the right time. Now, for those of you out there that are seriously considering doing this in the new year and you'd like some help, we would love to offer you a one-on-one strategy session where we can sit down and talk about exactly where you are today, where you'd like to be 12 months from today and longer term, and then we can educate you on the Australian market, and so you can take that information and go and absolutely smash it on your own, or potentially become one of the extremely small number of clients that we're going to take on in 2026, and we can hold your hand all the way through the journey. But this year has been phenomenal. Next year actually looks even better in terms of the predictions at this stage. And we just wanted to say that for the first time in a long time, we'll be able to hold your hand in New South Wales, Victoria, and Queensland. Whether you're looking at Sydney, Melbourne, or Brisbane, or whether you're looking at Newcastle, Central Coast, Wollongong, Sunshine Coast, Gold Coast, Bendigo, Ballarat, Geelong, or the Mornington Peninsula, we're now across all of those markets and extremely excited to educate you on the best options within each of them so that you can go and absolutely smash it in 2026.